Hey, what's going on out there? Social media. Ma'am K, how you doing, sister? How you doing?
I'm good. I'm good.
Oh, right. We're back on your channel, right? You
That's
ready to?
right.
You locked and loaded. We finna provide some great information. I know. I'm following your lead, right?
Yeah, I reckon.
And you guys go ahead and share this. We're gonna provide a little bit of financial information with you guys, man. Something that's not being taught in school. We know you guys are gonna get some benefits from it. We back on Melissa's page, her login. We doing whatever she want to do, whatever she want to talk about. We gonna.
Y'all see how he strategically uh putting anything that goes wrong on this episode on me.
Hey, this is the raw, uncut version. Whatever happens, happens.
Uh-huh. Yeah. I don't like that emphasis you keep putting on my channel and my show. What happened to our?
Oh, our show. Oh, okay. All right.
Look, it's only ours if it's successful, right?
Right. We had a special guest on. He ain't popped on yet, so it may just be me and Melissa doing this thing tonight. We're not gonna hold you guys long. This is what I say. We just want to share some information that's been helping us, and I hope you got to see some value, find some value in it.
That's right. That's right. That's right. Yeah. So, since we are on my channel, let me introduce my co-host here. This is Mr. Tony Clopton. Tony is a MyEcon business owner and is actually my upline, meaning he introduced me to MyEcon and told me about the benefits, and I just couldn't say no, you know? Mm-hmm. So Tony's been in the auto industry now for what? You said 22 years?
22 long years.
22 years. He's had several businesses. He does real estate. He's got properties that you both rent and some you sold, right?
Absolutely. Yes.
Yeah. And he's been in this money game for a minute now. And he's my expert.
Oh, I'm the expert.
Yep, believe it or not. So anything y'all learn or don't learn tonight is on Tony.
Okay, cool. Okay,
see how I flipped that back on you?
Yeah, you did that. Yeah. Okay, good. Thank you, Melissa, for putting all that pressure on me. I appreciate that.
Anytime.
Yeah, they say pressure creates diamonds, and I'm ready. I'm ready to shine.
Is that what they say? Okay.
Yeah, that's what they say. Okay, so so the topic that I want to kind of talk about, Melissa, if it's okay, let's talk about how you can actually self-fund a MyEcon business, preferably. We've really been blessed to have mentorship, financial knowledge, man, just hands down the best information we've been able to share. Thank you, wife. Thank you, wife. Excuse me, y'all. It's been a long day.
Yeah, go on get your gear right juice.
That's great, baby. Thank you. Okay. So let's, like I say, this is raw and uncut. Got a lot going on. So we're talking about how you can actually start a self-funded business. Me and Melissa was actually going to show you a clip from the founder of MyEcon. He always talks about how a MyEcon business can be self-funded. And the meaning behind self-funded means that you can actually get the government to pay the bill. And I was like, I know a lot of people out there trying to say, what do you mean? What do you mean, Tony? What do you mean the government can pay the bill? Well, as me and Melissa understands now, our first strategy teaches us a concept called income shifting and how to properly adjust your W-4. So Melissa, in your own words, can you tell everybody the purpose of the W-4 if you can remember it?
If I can remember it, I can do better than it.
Okay.
let's see here. I have the specifics.
Okay. Let's go with the specifics.
Yeah, let me be more Pacific. Not Atlantic, but Pacific. Okay. So what is the purpose of the W-4? The purpose, complete Form W-4 so that your employer can withhold the correct federal income tax from your pay. Consider completing a new Form W-4 each year and when your personal or financial situation changes.
Now, Melissa, where did you get that information?
I went right to the IRS.gov.
Okay. So, guys, we're not pulling these passages out of thin air. These things are there, especially on the front of every W-4 at any company. You can specifically read what it says. It says to withhold the correct amount. Unfortunately, this thing comes with poor instructions, and it's millions of people that are filling this thing out incorrectly. Man, when I first got this information, man, my mind was blown. I end up going back to every last paycheck and pay stub that I ever had in my job and found out that I was overpaying my taxes $800, $900 to even $1,000 based on the overtime that I was making at that time. And I was literally sick, Melissa. I'm literally giving up all of this money, struggling from paycheck to paycheck, and the government walking away with $800 and $900 of me overpaying my taxes. Now, Melissa, let me ask you this question. Why do you think most people are overpaying? I just got to ask you, why do you think most people are overpaying on their taxes?
Because they don't understand how the tax system works like we did.
Absolutely. Hey, I can admit I didn't know I was overpaying my taxes, and I was giving them an extra $10 because I was so afraid that I was going to have to owe.
Right. You was just giving them 10. I was giving them 50.
Wow. An extra 50 because you didn't want to have to owe money.
Right. Because I was stuck in that spot where it seemed like I couldn't win because I didn't own a home. And for the longest, I didn't have any kids. And those are, my tax lady used to tell me all the time, you need to either buy a house or have a baby. And I'm like, it's got to be more solutions than that, just those two.
She's trying to put you in a pole house. It's right. Think about this, listen. If I can't take care of myself, why would I bring another life into this world? You know what I mean? Okay.
Like, you want me to create a bill so I can have some tax money?
Right. Oh my goodness.
Either way, I was gonna be creating a bill if I buy a house or have a child. So, but I got pulled up now the letter from the IRS. Yeah, I can see across the top is from the Internal Revenue Service.
Yes.
And it's basically saying that this is from April 29, 2005, but still good information. So it says that first, some refund facts. Federal tax refunds to individuals totaled more than $215 billion last year. So this was 2005. They're talking about 2004. More than 101 million taxpayers got refunds. That's 80%. It said the average refund back then was $2,126.
Okay.
Then it goes on to say, where does your refund come from? Which is a good question that I did not have an answer to until I joined my econ. And I told you, I thought it was like Price is Right. Spend, get that big money. Okay, so it says it comes from your wallet or purse. Whose wallet or purse?
Your wallet.
Your wallet or purse. Okay. When you tell your employer how much to withhold from your paycheck, or you make an estimated tax payment, for the average refund, that's about $40 too much a week. So it's 52 weeks in a year. If you giving them $40 too much, that's adding up. It says you might be using the extra withholding as a forced savings method. And I was doing it for a while. It's like you'd rather get it in a lump sum versus getting it during the year. But then it's like you don't really look at the big picture that while you're waiting on this lump sum, your money is being used by the government to do whatever, and they're gaining interest off of it. And after they done played with it and did what they want, they're gonna give you what's left over at the end of the year. And just think you could have had that same money and could have invested it in something for you that it could have been growing interest on. So it says you might be using the extra withholdings as a forced savings method, but Uncle Sam doesn't pay interest on refunds except in special circumstances. Putting the money in any type of savings account or paying down debt might be a better option. Can I say that part again?
Say it one more time.
Putting the money, meaning your money that they hold until the end of the year to give you as a refund, in any type of savings account. Now, we don't say with my income, we don't advise any. We advise you to put it in a savings that's going to make you some more money. But, IRS is like any savings account. And it says, or pay down debts might be a better option. So for everybody that waits, like I'm going to wait till I get my income tax to pay such and such and such off. You can be paying that off during the year. You can be paying that card off now and not getting that interest from every month where, So, I mean, think about it. It says, but not everyone gets a refund. Some even face a penalty for not paying enough tax during the year, which is where I was, So I just thought that was very telling that this information is coming from none other than Uncle Sam himself.
But look at here, Melissa. I don't know if anybody was mad like I was mad when I first heard this. I'm like, the nerve, the audacity for him to tell me that I may be using it as a forced savings method and saying, but you don't know no better. You know what I'm saying? Why would they? Yeah. Look, y'all, look. Your money in your pocket every pay period is more effective than allowing someone to hold it all year.
Right. Exactly. That make me think about somebody sitting around holding your baby and getting it spoiled and they want to give it back to you.
Yeah, here you go.
And now you can't do nothing because they don't want you to put them down.
Oh my goodness. Oh Lord have mercy. Hey, we gotta stop talking about this right here because I get mad all over again.
Hey, Tanya from the Hood Table. She says, I sure wish I could still get those child tax credits. And see, for something like I was on the opposite end where I hadn't had them yet. Some people's kids are out of school now, so they're not getting the tax credit anymore. So it's both ends of the spectrum. And for those that don't know, my econ is short for my economy. And what we mean about that is it's your economy. It's what you're budgeting to do or saving to do. It's not worrying about the economy of the world, but your economy. And we try to teach personal financial success by telling you things like this that we've learned, and we want to share them with you because they made such a huge difference in our train of thought when it comes to money.
Right. Hey, Melissa, can you hear me okay right now?
Okay.
Okay. Hey, look, somebody tried to call in, but look, lowering your taxes. I'm telling you, kids grow up, they leave the house. You lose those tax credits, but we're talking about 470 plus tax deductions that can replace those tax credits. So we all have to get in a mindset of thinking as a business owner and get all of those tax deductions applied to your life. So the tax credits won't even matter no more when you're being able to write off your cell phone or you're writing off your vacations or your household expenses. You know what I'm saying? So it's just like once you get on the right side of the tax system and start looking at all of the things that you can lower your taxes with, you won't even.
It's bottom up, right?
Oh well, yeah, it's kind of hard to. Yeah, we wrong.
It worked even with the book upside down. It still worked.
Yeah. I'm telling you, hey, once you get this in you, and then you know that you can start writing off stuff. You looking for stuff you can write off. You know what I'm saying?
Right.
Yeah. How can I lower my taxes? I'm a business owner. Everything. I ain't leaving nothing out.
Nothing on the table. Yeah. Because like
Right.
you stop thinking less as an individual that works for somebody.
Yeah.
And you start thinking more as I am a business. I'm a brand. You know? So when you start thinking that way and change that mindset, it just hit a little different. Everything hit a little different. Especially this W4. That was the game changer for me because I was able to I think I told y'all last week I was able to bring home an additional $800 some a month just because I stopped giving them all my money. You know, I was a business entity.
Yeah, but you know what, Melissa? A lot of people are saying, but aren't you gonna have to pay at the end of the year? Ain't you worried about that?
You know, to be honest, I wasn't worried about that. What I was more thinking about is, okay, I'm used to getting a deduction. Getting a refund. I won't have a refund this year. But guess what? I still got a refund. I still got a refund. So, and like I was saying before, that just tells me that I still was paying too much, letting them take out too much, because really you want to try to break even. You don't want to have a refund. You don't want to owe. And by doing it, when you break even like that, that means you've been getting all of your money during the year and you've been able to use it for what you need to. I mean, if it's that big of a deal to have a lump sum, put that tax money in the account. Every time you get paid, you know, take out the amount they would have took out and put it in the account, and don't touch it till April.
Right. So check this out. So the word I think that most people need to put in their vocabulary is leverage. You can literally leverage your job to create wealth. So if they're taking taxes out of your check, I don't care how much it is, you can pull that money out, pay off that debt faster, or invest, which will put you in a better situation a year from now. Right. So imagine if your debt was zero and all you had was a paycheck coming in. What do you do with the extra money? It's investing.
Invest. We got company. We got company on the screen. Here we go.
What we got here? Hey, there you go.
What up?
Hey, what's going on?
Not much. What's going on with my financial business partners?
Guru.
Gurus.
I'm a guru.
Word. My mentor and mentoree.
Please, you the man. You this your season.
No,
it's your season.
This is your season.
For grace and favor. It's your season for grace and favor.
Look, he the man till April.
Yeah. Hey, I know that, right? I'll take it though.
All right. Hey, let me introduce you right quick. So right now we have Mr. Ken Lee, my co-worker, friend, and business partner. Just made EVP gold in this awesome business, man. Shout out to my man Ken Lee. I'm excited. Hey, last year, 1 year ago, you were a regular EVP. You ranked up, and it took a year for you to get it, but you finally got there, bro.
I did. It took me a little time, but you know, I was kind of focusing on the other aspects of the other business, so I wasn't really pushing it to other individuals. So I was just focusing on myself and on the business side of it. But I'm starting to come around, to present it to more people, especially people, that's looking to improve their tax situation. So let them know that there are different options out there, different ways to improve your tax situation, not just by having kids to get a little more money, but
Thank you.
maybe starting a like I said, home-based business, which is the most affordable and practical business to start, because everybody doesn't have $200,000-$300,000 to start a brick and mortar business. So this kind of puts you in the game at a relatively low entry cost. And so that pretty much was kind of got me involved with it.
So Ken, let me ask you, specifically what my econ does, what kind of products that you can offer to your clients, and how would you explain to them how a home-based business can benefit their personal their outcome on their taxes? Like it could increase their what would you say to somebody that may be getting hit in taxes? What would you say to them that my econ could offer to them?
Well, the tax deduction is probably the biggest um the biggest thing dealing with my econ, because like say you have a business where you can write off all over 400. There's up to 400 tax deduction that you can write off by being a business owner.
Mm-hmm.
And when you just have a W-2, you just have a job, you're limited on things that you can write off. If you got kids, or then with Trump came into office, he eliminated a lot of those um, deductions. So
Exactly.
he raised the standard. He raised the standard deduction up, but he took away a lot of the itemized stuff. So 7 out of 10 people don't have enough to itemize over that standard deduction. So
Mm-hmm.
everybody pretty much uses the standard deduction, and so they're pretty much all you're going to get. Whether it's 12,000 or 24,000 if you're married, but
Mm-hmm.
being a business owner, you're able to get that money. Then also you're able to write off, money that you use for the business. Now
Mhm.
you have to participate in the business. You just can't be like, well, you
Mm-hmm.
know, just put it on paper. Just put my business on paper. But no. So you have to actively participate in the business, and
Mhm.
then you're able to write that stuff out, like mileage, uh, your car. If you leasing a car, you can actually write off lease payments that you use to go talk to your clients. Stuff like that. Your utilities, you get a certain percentage off of all your utilities in your house, which is something you're gonna have to pay anyway. You got to pay your electric bill, your light bill. So with
Mhm.
this, you're able to get, depending on your tax bracket or the square footage of your house, you get a certain percentage. So you might even get an additional 15, 20, 30%, back from paying bills that you're gonna pay anyway.
Mm-hmm.
So you get a little refund that way. Um,
Yeah. And people don't realize that stuff add up.
yeah, yeah, it does. It does. It might not be, you know, it ain't gonna be, a whole lot, but like I said, every little bit counts. And then once you
Mm-hmm.
get into the miles, 54 cents per mile, you going back and forth, talking to clients, whatever, you taking a 50-mile trip, they're getting 50 cents a mile, so that's $25 that, that potential tax deduction that you'd have made just going across town, just talking to somebody. So
Okay.
if you
We
have a
got a
client,
question. We got a question from the hood table. She wants to know. Let's say you work at home for your employer. Can you write off things even though it's not your own personal business? So she's a W-2 employee
yeah,
that's working from home. So it's not quite the same.
nah. Now, as a W-2 employee, there's not really anything that you can write off as far as from working from home, because you're still a W-2 employee. Now,
Mm-hmm.
if she was a contractor or a 1099
Now she has a
employee,
1099 too.
okay, she's a 1099, then she'll be able to write off
Mm-hmm.
like computer, internet, write off if she had to buy a computer, anything she had to buy to run that business from her home, she's able to write that stuff off.
Yeah,
So,
that's the
um,
good thing about it, Tanya. You may be using that same internet and cable and everything for to do your W-2 job, but since you have your own business, it still count.
yeah, yeah. And
Because
so
that's pretty much what I do. I work from home for my W-2 job, but I also work from home doing this business. So yeah.
yeah, so the stuff that you use for that W-2, you can slide it on over to the
Sliding on in.
1099 side,
That's right.
then get that money that way.
Hey,
Right, because
Ken,
the same electricity I use for my W-2 job, I use that same electricity for my home-based business.
mhm.
Exactly, exactly.
Hey, let me ask you something, Ken, on the tax side. Quite a few people took unemployment during the COVID,
Right.
and they made considerably more money than they did on their job. How would that affect somebody's tax return?
Well, it affects a lot because once you took that money with COVID, you was able to take up to $100,000 out your retirement account, which is 401k for most of us. So if you took that money out, you took the money out, you was able to take the money out without a penalty, without that 10% penalty, but you still had to pay the taxes on it. So let's just say, for instance, if you took up to 100,000, so you wouldn't get penalized at $10,000 for that 10% penalty, but you have to pay taxes on it. So and with taxes, they only take out 10%. But if your tax bracket is in the 20 and 30% range, so they only took out 10, so now you got 20% you have to look at and paying additional taxes on. And if you make 100,000, now if you take it all in 1 year, now you're at 200,000. And so your income has increased considerably. And once you start making over 150,000, a lot of the deductions they're not as effective once you make over a certain income. So 200,000 would put you out of that range. So a lot of stuff that you're using, a lot of deduction that you thought you'd be able to use, you won't be able to, because you won't get your earned income credit because you've been making too much. You still get some money for your children, but a lot of stuff it decreased. The more you make, it decrease. So you have to look at that aspect, and then you have to look at, okay, they took tax out on 100,000, but if you decide to split it over 3 years, they say, okay, take $33,333 each year, but the tax that was withheld, you only can use that for that first year. So so that first year look good, you might be able to get a refund, but you got to think about that second and third year, you're going to be adding 33,000 on top of your income. So if you still at 100, so now you're at 133, and you're only paying taxes on 100 because that's your W-2. So you got to think ahead. And if you get, and one of the ways to do it, if you're getting a refund after the first year, there's a line on your tax form say if you want them to hold it to kind of pay ahead for next year. That's one way to do it. Or
Yeah.
get your tax return and then invest it, put it in a money market, or even put it in a safe stock or something like that that'll kind of help it grow. And then when the time comes by next year, you're able to pull that man out and pay those additional taxes for that second and third year.
Right.
So you just can't be like, well, they took taxes out, but they only took 10%. So you have to look at each individual
Yeah.
situation differs. So you have to look at what you're getting taxed at.
Hey, Ken, I'm glad you mentioned that. That's why it's so important to have a tax professional that can help you with tax planning. That's why in my econ, it's always important to know what your tax liability is, to know exactly how much taxes you are supposed to pay. So getting with a tax professional like Ken, he can kind of help steer you in the right direction for the next year and the year after that.
Right.
Tax planning.
Yeah, like I say, tax planning is just as important as tax preparation, because if you keep doing the same thing and your situation change, you're gonna get your liability is gonna get bigger and bigger, and you won't be prepared. So you'd be like, man, I owe too much. I ain't gonna file this year. And then now you in deeper in the hole because you decided not to file. Now you getting
Been there.
penalized. You getting penalized and taxed at a
Yeah,
daily rate. You got the IRS. The IRS. Once you owe the IRS, their
it's coming
payments
for you.
compounded daily. Interest and penalties compounded daily. So you can go from 0 to 100 real fast. So
Right.
From 100 to 0 real fast. 'Cause I
so
done had Uncle Sam to come through and levy me and have me looking cheap on a Friday. I'm thinking I'm finna get paid, and
got
I
gun
call the
machine.
bank and ain't nothing in there. I'm like,
Yeah.
what? Wait,
So
what?
So if you don't pay them, if they send you a alert say, hey, you owe X amount of dollars, you be like, oh man, ain't gonna worry about it. And after a certain amount of time, they have the right. They can garnish you. They can take up, I think, to like 60% of your check, and they not even gonna tell you. Like, so you
It
just gonna
ain't a
you
long
just
amount of time either. I got to have 1 month. and they cleaned out every account. I got PTSD from it.
Hey,
They buoyed
hey,
you up. You
that'll
got
do
buoyed
it to
up,
you.
didn't you?
So
They
the
got me
best,
good. They got
so
me real good.
one of the best things to do if you owe them is to if you're able, go ahead and get a loan to pay them back, because
Mm-hmm.
you get a loan, you paying 6, 7, let's say 10% interest. You know what I'm saying? But you can pay that back, over time, over 2, 3, 4 years. But if you owe the IRS, you trying to pay them. If your minimum payment is $100 a month, but your penalty and interest and what you owe is equal to $150 a month, you going in
Mm-hmm.
$50 in a hole every month. And so
Okay.
it almost double. So if you
Think of the game.
got somebody to give you some money, loan you some money, get a loan, whatever,
Yeah.
get them 3 letters out your pocket.
Yeah.
You know what I'm saying? Quick,
Absolutely.
fast, and a hurry.
Okay,
We got
look,
we
y'all.
got a commercial break.
Okay, got a commercial break. What we got?
Our sponsor for tonight is
Thai and Nice Essentials. We
Hey.
all know that we're still in the pandemic. And we all know that we still need hand sanitizer. So I think everyone should go to ThaiandNiceEssentials.com and get some.
Awesome. That's what I'm
Awesome.
talking about.
All right.
all right.
Yeah.
Now back to our regularly scheduled programming.
All right.
Hey.
Oh wow, that's pretty good. Okay, look.
Hey, we got another one. Uncle Sam that did a number on Tanya said, Uncle Sam that got me before a few times. They like a drunk uncle. Every time you see them, they asking for money.
For money, yeah. Exactly.
Let me
Once you
hold
get that
something.
letter, once you get that
Let me
letter in
hold
the
something.
mail, when you get that letter in the mail, you be like, crap.
Let me
Where's
hold
your
Right.
something.
Yeah. You be like, get up. But definitely, if you took some stimulus money, make sure you plan for spread out over 3 years. Make sure you plan for the other 2 years. First year you're gonna be fine if you took out taxes, but that second and third year is gonna add about 33,000. So if you're already in a high tax bracket, you're gonna add money on top of that. So you definitely need to be putting money back.
Mm-hmm.
Or if you get a refund that first year, let's say you got $2,000-3,000 back, hey, let them keep 1,500. You know what I'm saying?
Right.
You ain't never touch your hand, you ain't seen it, so it ain't.
Right. Now
It's,
this is you're talking about if you went into your own like 401k or something, right? Not
right,
about the stimulus, because the stimulus money won't be taxed, right? I got a letter, but
stimulus might not tap, but this is if you go into your 401k.
look, I got that letter, but my PTSD kicked in. I'm like, they gonna get this money. They gonna tax this money.
But now the stimulus, then just looking at the news, she be getting an additional 1,400, but I think it's up to like 75,000.
Yeah,
So they're gonna cut out. They're gonna cut out a lot of people, but they're gonna give it to the people that they kind of need it. You know what I'm saying? So
yeah.
but really, it's kind of well. I know that's another subject, because it's gonna be based off your 2019 tax return. You might have been working good in 2019 and made up 75.
Yeah.
2020, you might have been sitting at the house, but you're not going to get it because it's going to be based on your 2019. So it's good and bad, but like I say, they trying to get it to as many people possible, below that certain threshold.
Okay, Ken, look, check this out. We're getting close to our closing time. Now,
Okay.
y'all done painted an ugly picture about the IRS coming after folks. I got to bring it back in to help people understand that you can lower your taxes, right? With a
Right.
business.
Right.
We were talking a little bit about adjusting your W-4. And so hopefully on next Thursday, we're going to show people how to get some additional money to kind of help offset some of the debt, offset, like creating some investments and build some business income, right?
Right. So there's a couple of ways your W-4 can help you. You can get your, like, in 2020 it came out with a new form in which if you hadn't changed it, you still they probably taking out money at the old rate. So you're probably getting probably taking out too much. So you definitely want to do the new form. And on that form, it has a line for whether you want to take out additional taxes. So let's just say you're going to owe for the next 2 years. You can have them take out an additional, $25-$30 every paycheck.
It won't
That
hit you
way,
so hard.
right? So it won't hit you so hard, when you file your tax returns, or you know what I'm saying, or you just take that money. If you take the additional money, you take $40-$50 a month. Hey, you can put it into my econ or any other home-based business. Hey, this is my monthly membership,
Mm-hmm.
and you can work your business. By the time the end of the year, you're getting a residual income. If you're working your business, get residual income, and you're getting more write-off. So that's going to lower your taxable income, which will lower your tax liability, which
Got a
will,
question.
uh-huh.
Got a question. What would you think would be the most effective way to lower your taxable income? Putting more money on the balance or allowing your deductions to lower your taxable income?
Allowing your deductions to lower your taxable income would be the best way. So stepping out and doing that home-based business would be the best way. Now, if you do both of them, hey, that's even
It's
better.
double.
Yeah,
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 but
yeah.
you definitely can see it faster, or see um more write-off. You'll see your taxable income lower more by the home-based business, by the my
So
econs that's out there.
I got you on this one right here. So as a home-based business owner, you're going to be lowering your taxes with money you're already spending. So by getting those credits and you're writing off your lifestyle, you could write off anywhere from $10,000 to $15,000 worth of tax deductions, opposed to you trying to save $10,000 worth of money.
Right,
Right.
right.
Right. It's easier
Because
to bring some tax savings forward because you're doing it anyway,
right, because
opposed
like
to
you say,
trying to build up the cash flow.
right,
Yeah.
right, and like you say, because you're gonna your stuff that you use every day is gonna lower your taxable income. So that's definitely, you're gonna pay for gas, you're gonna pay for power, you're gonna pay your cell phone anyway. So
Anyway.
Yeah.
let those payments lower your taxable income, and so
Hmm.
that way your tax liability has decreased, and you're still taking out the same amount of money as if you wouldn't getting those deductions. So you can leave it alone, just kind of leave it as is and work your
Hmm.
business.
Hmm.
So just say we take $100,000 for example. So you paying taxes on 100,000, but your taxable income is only maybe 75, 65, $70,000. So you didn't pay tax on 100. So now you're looking to maybe getting a refund, because your taxable income was lower, and that money can help you if you took money out your 401k before, for that, for part of the coronavirus act.
Hmm.
It's a word for it, but if you take it out for the corona, that's another way to help, pay that money, pay taxes on that money.
Hmm. Hmm. That's good. That's great information, Ken. We appreciate it. I think at some point we need to do like a chalkboard. I know sometimes people can hear you
You
talking,
need to
but they
see
be like,
it
"What you
right.
say?"
Yeah,
Yeah, they ain't heard nothing you said, but put it in writing
yeah, you
something.
kind of see it. We get a whiteboard somehow, and put some
Yeah,
numbers and all that type stuff on a whiteboard.
yeah, that'll
Yeah.
make sense.
You Charlie Brown and them. Wah, wah, wah,
Yeah,
wah, 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 wah,
What is he
wah,
talking about?
yeah, you
wah.
got to get that visual. You got to see
Right.
what I'm talking about.
Okay.
Tanya
That's great.
asked, are we really going to give, are they really going to give us 75,000? What's the 75,000 about?
Um, well, that's like the maximum income in order to get the $1,400 coming up for the next stimulus.
Oh, because she got
Yeah.
on here like we were going to get 75,000.
Oh,
Oh,
No,
okay.
no, that's like the maximum income,
No,
but
you can
Tanya.
make.
I'm not sure if this is going to be adjusted or your regular income. So that's something that we'll see in the next
Oh,
couple of
yeah,
weeks or
because
so.
like if let's say you made 75 or 78,000, but because of your deductions, your taxable income is lowered to
Your
50,000.
AGI. Yeah, your
Yeah,
Yeah.
adjusted
Do
gross.
you
Yeah.
think that'll be what they look at, or just
yeah, I think they're going to look at your adjusted gross income, which is the AGI he just mentioned. So if your
okay?
AGI is under 75, then you should
Be good.
be able to get it. But like I said, they'll have more details once it goes through the Senate. Once the Senate approves it, it won't be no $15 minimum, but we'll get it. If you're under 75, you get some money that way.
So they
So they're
hadn't
coming.
changed the date or nothing, have they? Is it still April 15th?
Right now it's
We
the
got.
April 15th. They hadn't extended it yet, but they
Okay.
probably will within the next month or so. Unless you live in Texas, they extended it a month for all Texas residents
Oh,
because
okay.
of that blackout and all that type of stuff. So they did extend it a month for Texas residents.
Okay. Good deal. So so on Thursday, Ken, you're gonna dissect and unfold the IRS estimator to show people how they can go in and properly adjust that W-4 to see if there's some extra tax dollars that they can use to pay out their debt and to start a business, right?
Right. I don't know how I'm gonna get it on this screen, but
Well, you know what? I can pull it up and type in what you want me to type in, and you just do the explaining, Lucy.
okay. And we'll
Yeah,
try.
that'd be good.
We'll give it we'll give it a go. We'll give it a try. And
Okay.
see,
Yeah.
if that works out, and we'll like I said, we'll go through kind of step by step. We won't take too long, but kind of get the the major points and how to help and and all that good stuff.
Okay. Good deal. Okay, y'all. We've been on this thing 40 minutes. Too
Yeah,
long. Great information, Ken. We thank you for having you, man. We appreciate the information you share.
I
That's right.
appreciate y'all having me on here.
I
Thank you,
got your
Ken.
information going across the line at the bottom if anybody's interested. The tax place, 205-986-9977. And the email is thetaxplace@yahoo.com.
That's it.
All
That's
right.
me.
All right.
And thank you for everybody that tuned in from, I didn't really see anybody from Facebook, but I do see a couple people from YouTube. Thank you, the Hood
Okay.
Table. Thank you, Silly Mommy for Life. And if y'all got any questions, save them for Thursday when the tax man is back. The tax man cometh when he cometh back.
Hey, they're knocking on that door like do.
All
Okay.
right.
All right. Well,
So, yeah.
I'll see y'all Thursday. I appreciate
All
it.
right. All right.
All
Thank you,
right.
man.
All right.
Good night, everybody.
Good
Okay.
night.